Not yet. You can. Perfect. Great. Thanks for confirming. All right, guys, let's go. Let's get a good understanding of this particular topic. Again, I've really emphasizing on these notes. So please make sure at least 3 to 5 times in your day you should revise these notes, guys. Because as the chapters keep on piling up, utilize today's day at least 3 to 5 times. Try to read everything and get a good strong clarity. Okay, so I've got the entire note summarized for you here. Top 5 ideas from each particular slide. So first, I will just keep the textbook open as well simultaneously. So when you revise, you also revise it like that. Keep the textbook open and keep the Excel open, keep it next to each other, and you see your revision will be super easy and super clear. You will not have any problems at all. Okay, and at least 3 to 5 times easily you can revise everything. Okay, so first we look into the chapter's learning objectives here. So there'll be multiple things that we'll look into here when we're studying. The difference between functional currency and presentation currency. We'll understand the difference. There's again nothing here for you to learn. It's just being thorough with the summarization. Then you'll study about what is foreign currency, monetary, non-monetary, the application of IS 21, and there's a lot of relevance in ACCA because in AFM, yes, in AFM, FM, this will be included, and these topics will help you a lot when you do those subjects. Okay, so please make sure that you understand this topic well. Again, there's nothing much of a year for you to learn. It's not a topic. It's just basically from an exam perspective that this topic consists of these ideas. So there's nothing really here in the slide 1 that will trouble you. Now coming to slide 2 here. So when I scroll down to slide 2, you will see the objective of IS 21. So here we have again, what is the objective of the standard? So let's look into this. And from here, we'll take the chapter forward. Okay, now coming to the first real part of the chapter here. So basically the standard IS 21, it provides rules for translating foreign currency transaction into a reporting currency. Okay, so very simple guys here. First Principles Academy is in Bangalore, Kormangla. Right now, as I'm sitting there. So here our books are made in rupees, right? But we again have a lot of students who are from other parts of the world. Like for example, here now we have Karan, Arpita, and along with that, we have Mukund as well. They are from different parts. Then we have Peria. She's from Malaysia. She's from a different part of the world, right? So now, whenever these transactions take place from the point of view of First Principles Academy, they are called as a foreign transaction. First of all, any transaction that is not in the currency of First Principles Academy's books, right? The First Principles Academy's books are in rupees. So any transaction not in rupees, first of all, is deemed to be a foreign transaction. A. Okay. So whenever there's a foreign transaction, I simply cannot record that transaction in my books directly. I need to convert it to my currency, another currency that is rupees, and then record it in my books. Right. For example, if Arpita has made a payment of £10 to me for XYZ, whatever reason, I cannot record £10 as a payment in the books of First Principles Academy. That cannot be done. But what I can do is that I can convert that £10 into rupees, which might be roughly whatever, 1,250, 260, 270. Okay. I can convert it to that. And then I can record it in my books. I cannot directly record it in my books. That's not possible. That's not allowed. Okay, so IS 21 ensures that all foreign transactions from a company's perspective are recorded in are translated and then recorded in the books of accounts. Okay, but all the rules and regulations around the translation is given in IS 21. Okay, so Arpita making the £10 payment to me and me recording that as 1,260 rupees in my books. How did that £10 become 1,260? That all the translation that goes into that, how Arpita's £10 has become 1,260 in my books. That translation, the rules around that translation is given by IS 20. Okay. So the FR syllabus focuses on individual transactions only. In SBR, when you guys reach there, you will see there will be more group accounting involved here. There will be a parent subsidiary. There might be more subsidiaries involved rather than individual transactions. In FR, it's very easy because it's only individual transactions. Okay. It ensures that the transactions are translated consistently across reporting period. So every year that Arpita pays me £10, I use the same set of rules to do the translation. Right? I use the same set of rules to do the translation. Right? I use the same set of rules to do the translation. Every year that Arpita has paid me £10, I cannot keep a different kind of a treatment to it in 2025, different in 2026, different in 2027, different in 2028. That doesn't really work out. Okay, and that is the objective, to ensure there's a consistent translation process. Next, reliable reporting. Correct translation improves the reliability of the financial statements. If I've translated it correctly, use the correct rate. Imagine if I forgot Peria's currency, she had paid me in Malaysian currency. I don't recollect. Okay, so she had paid me in a certain currency, and if I'm using that exchange rate to convert Arpita's payment to me, I'm using a wrong exchange rate. Right, I am using Peria's transaction and she's from Malaysia and she's paid in a certain different currency. And if I use that exchange rate to convert Arpita's £10 payment to me, that's a wrong translation. Okay. So I cannot do that. So I have to ensure correct translation. So that's the objective of IS 21. And finally, international comparability. It helps financial statements remain comparable across different countries. Right. It helps financial statements to remain comparable across different countries. It can remain comparable. Okay, across different companies, it can remain comparable. Okay, it helps financial statements remain comparable across different countries. Okay, across different countries, it remains comparable. Very important. Okay, so that is about the top ideas here. Okay, so let's go through the first two one here. Let's look into this here. Nandika, how have we understood this purpose of IS 21 and individual transactions? What is the FR saying about individual transactions? The first 2 points here. Yeah, Nandika, can you hear me? Yes. Yes. Absolutely. Very good. Different and individual transaction. Now, what does individual transaction means is between people, right? Or a single transaction between companies. So there will not be a translation of a foreign subsidiary into a company's presentation currency. This is all you will see in SBR. In FR, you just have small transactions. So it's very easy from the FR level. So in FR level, there will be very individual transactions. You will not convert a subsidiary. You will just convert individual transactions. So that will be very easy from an FR perspective. All right, great. All right, we look into the next 2 points here. Yeah. So let's go through this. Nandika is done. Let's go through this. Indrani, consistent translation and reliable reporting. कैसे समझा ये दोनों point? ठीक है. Perfect. So first of all, is that a transaction translated across reporting? It should be done in a standardized manner. That means same rules should apply. And second, if state rules are applying, you would realize that your financial statements in the long run have become more reliable. Okay, perfect. And let's go through the last point here, Karan. Let's take this, buddy. How have you understood international comparability? Hmm. 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 Perfect. Since IFRS, as you know, guys, are international financial reporting standard, it has to ensure that the comparability is there on a global level, that across different countries you can compare statements, and you can only do that if there is some kind of a same set of rules and regulations. So it ensures comparability is really good. Okay, so nothing too technical here, guys. They're just slowly I've introduced here. So any questions, guys, on this one? First 5 points, I think it was just very basic, gives you an intro into the chapter. Next 5 here are pretty much where we started. Any questions on these 5 points, guys? Please shoot. Okay, we're good with here. All right, let's go. So objectives are done, guys. Now we'll move into definitions. Okay, so objectives are done. These 5 points are clear, right? I'm making you guys also read it now, because if you've read it once, guys, 3 to 5 times you have to read it today during the day. Right after the class, you can read it once. In the lunch, when you take lunch, before that, maybe once. And dinner, evening, at least 3 to 5 times you read this today. Entire Excel file. I've just tried to summarize it to a very big extent for you guys. So please try to make sure that you read everything. Okay, at least 3 to 5 times today. Okay, next we'll go into exchange rate. Okay, so next part about exchange rate. Firstly, we'll look into historic rate. I'll just zoom in a little more. Okay, first we look into his historic rate. Okay, let's get an understanding. Historic rate on the date of the transaction. Okay, so let's assume I got into a transaction with, let's say, who's here out? Who else? I got into a transaction with Mukund. Okay, and he's probably somewhere in London, and we got into a transaction. I got into a transaction with him on, let's say, 1st January. That was at the start of the year. I got into a transaction with him, and he has a credit period of, let's say, 8 months. He has to pay me in August 1st. Let's assume he has to pay me in 1st August. So 1st January or 31st August he has to pay me. He has to pay me on 31st August. Okay. So the day on which me and Mukund got into a transaction, that was 1st January. On that day, what was the exchange rate? That is called historic rate. Me and Mukund got into a transaction on 1st January. He has to pay me on 31st August. So the rate, the exchange rate that was in place when we got into a transaction on 1st January, that is historic rate. The rate at the end of the year, closing rate. Okay. Average rate again is a rate that is, again, the guidance is not given on how to calculate it, but it is a representation of the rate that is between the highest and the lowest rate during the year. In between that, on an average, what was the rate throughout the year? It is an average rate. Spot rate is the rate right now, right at this second, 12:55 p.m. in India, 23rd July. Right at this second, what is the exchange rate? Right now, if I Google, what is the rate? That is called the spot rate. Okay, right now, if I find out the exchange rate, right, 129, right now, this is the spot rate, right? But when me and Mukund got into a transaction on 1st January, okay, 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 but let's assume when on 1st Jan, okay, so, okay, it's not as simplistic to get that here immediately. Or imagine on 1st Jan, that is 1 year ago, is it? More than that. Okay. If it was 1 year ago, it was anywhere between in the month of July, maybe. In the month of July, you can see this is today. So, agar मैं first Jan, if I go to first Jan, okay, first Jan, Jan. On first Jan, it was 121. When me and Mukund got into a transaction, or let's say first Jan, yeah, when me and Mukund got into a transaction on first Jan, it was 121. Right? On 1st Jan, it was 121. This is which rate? Yeah, quick quiz. Anybody? This rate is called as what? Historic rate. Absolutely right. Okay, and the rate today, right now, which rate is that? Spot rate. Absolutely right. Absolutely right. Thank you. Okay, so that is the meaning, guys. Historic rate, closing rate, average rate, spot rate. Now let's look into what was last year's closing rate. Okay, now let's look into what was last year's closing rate. Okay, last year's closing rate. Oh yeah, yeah. Okay, this is last year's closing rate, guys. 121.06. That was the closing rate. Me and Mukut got into a transaction. This was the historic rate, and this is the spot rate. Okay, that is the spot rate. That is the meaning of historic rate, closing rate, average rate, spot rate, and selection of rate. Now, different exchange rates are used depending upon the nature and timing of those transactions. Okay, different exchange rates are used due to the nature and timing of the transaction. These are the parameters. Okay. Let's look into these four rates here, Arpita. Let's take us through this. How have you understood these? Okay. What about it? Okay. Yes. The now rate. Absolutely. The now rate. Okay. Absolutely right. Okay. And just to close it here, how do we ensure here? How do we ensure this, Indrani? That which rate should we use when? It depends upon which two things. Sure. When the transaction happened, we take the spot rate. When the payment is made, we can use the So sorry, when the payment is made, we can use the spot rate, and when the transaction happens, we can use the historic rate. ठीक है, बट यहाँ पे लिखा हुआ है देखो इंद्रानी कि कौन सी दो चीजें हैं जिसपे हम एक्सचेंज रेट बेस करते हैं. हाईलाइट किया हूं मैं. Nature and timing of the transaction. That what kind of, is it cash transaction, credit transaction, and timing, when was the payment made, when was the settlement been done. Sorry, credit transaction settlement date will be different from transaction date, but in cash transaction, the settlement date and the transaction date are the same. Based on the nature and the timing of the transaction, you will look into the rates. Okay, just have a look, guys. One good look here. Any question, anything that will stop you from revising? Because if you feel this chapter is easy, you will revise it 3 to 5 times. But if you feel anything is difficult, you will not revise it. So please break your mental barriers here. Anything that's not feeling, yeah, I know this. It should feel like that. Only then you will revise. Ah, that's not been given clearly in as per IFRS here. So I will not tell you that. But I'm just telling you one way is that you can do it, but nowhere in IFRS they have explained how to calculate the average rate. So it will be given in the question. Okay, so that is the exam POV, but from just to answer your question, that is one way you can use the rate on 1st January, rate on 31st December divided by 2. That is one way of calculating it, but nowhere in IFRS they have given any guidance and any clarity. So they give it in the question. You never have to calculate the average rate. Just letting you know. Never have I ever seen a sum where you have to calculate the average rate. Ever. Okay, so that is about the exchange, and yes, that is one way of how you could do it in a very layman way, but it is not really something that you have to calculate at all. Okay, so guys, this is again the slide 3. We've looked into exchange rates. Any questions on this, guys? Okay, all right. Next, we'll look into monetary and non-monetary items. Okay, so monetary items, I would say in simplistic sense, okay, that would be I can say easily converted to cash. Non-monetary items cannot be easily converted to cash. Okay, so that is a more simplistic way of understanding as it's given in the question textbook here. So I'll just keep it that only. Okay, so let me just put this only here. When something is easily is given, why complicate it? Yeah, monetary items can be easily converted into cash. Non-monetary item cannot be easily converted into. And these examples are important so that it will help you from remembering that. Okay, this is the same. Okay, so monetary items are items that can be easily converted into cash, receivables, payables, and loan. Okay, so this has been given here separately. I'll double write it. Okay. Examples are there. Non-monetary cannot easily convert it to cash. You can recollect it like that. And then you have some examples, right? Because it's important to classify because that tells you which rate to use. And you will understand it in the sums, but it's important to know at which rate you will be using. Right? That's why you need to know the classification, because as you do the sum, you will understand what I mean. That monetary has a different rate, non-monetary has a different rate. Okay, which I'll tell you exactly how, but right now I'm just telling you. That's why it's important to know the classification. Okay, let's go to get an understanding of the first two here. Okay, what's happening here? What is a monetary, an example of monetary item, Mamta? Take us through this. What is a monetary item and an example of monetary item? I've written it, I've highlighted it. Just read it out, please. Very good. Example. Yeah, perfect. Okay, receivable payment, payables and loans are common monetary items. Okay, perfect. Thank you, Mant. So that is about monetary items. Now let's look into non-monetary items here. Okay, let's take this one here, Nandika. What are non-monetary items quickly? Fixed amount. Okay, it cannot give rise to convert a fixed amount. It cannot generally, guys, cannot be converted to cash easily. Can I just take the liberty of putting it across like that? Right, so that you are easily right. So I don't want to actually, I'll just keep the textbook definition, but I'm just telling you to remember it like that, so it becomes easier. Okay, that's why I'm just putting it in my notes in a bracket. Not easily converted to cash. Okay. So there are broader implications of this. So don't quote this here. In a, if someone were to ask you in a room full of students that what is a non-monetary item, I would not recommend you to, give this definition out blatantly because it could be too simplistic to, ignore the more technicality of these items. Just for your easy remembrance, that's why I'm telling you that just keep it as an additional point here, just something to easily keep it in mind. Not easy to convert to cash. Okay. Some examples of this, Nandika, would be. Okay, PPE, inventory are the most common examples. Okay, perfect, absolutely. All right, Karan, let's look into why do we need to know, why do we need to bifurcate into monetary or non-monetary? What does this eventually help in? Perfect. It helps us to understand what kind of rate should be applied. Right? If you know it's a monetary item, there's a certain rate. If you know non-monetary item, it's a certain amount. Which rate we'll get there just in a bit, but just helping you understand with regards to the importance of classification. All right. Any questions, guys? Just have one good look here. Okay, positive. Let's go. Next, we'll look into functional presentation currency. So, guys, it's very easy. Presentation currency in which you prepare your financial statements. Done. Presentation currency is the currency in which you prepare the financial statements. Presentation currency is the currency in which you prepare the financial statements. Okay, functional currency, guys, I'll tell you an easy way to remember it. Okay, all this is okay, but I'll just give you my own definition, which you can quote. That is still okay. Okay, so the currency in the currency into which, or maybe let's put it like that, all foreign transactions are converted to this currency before being translated, before being recorded in our books of account. Before being recorded in books. I'll give you a very quick, easy example. All foreign transactions are converted to this currency before being recorded in the books. Like I'll give you a simple example here. So here we have a 10-minute delivery app. Okay. And let's me just probably give an example of this here. Okay. So an interesting way to know. So my mother tongue is Marwadi or Hindi. We speak in one of these two languages. Okay. So what about some of our other folks here at home? Okay. So Indrani, what is our language that we converse at home? Hindi. Okay, okay. Bhojpuri. Mine is Hindi. And Nandika, what about us? Malayalam. Wow, yeah, that's great. Malayalam. And yeah, we have good diversity. Mamta, what about you? Kannada, is it? Kannada. Okay, Arpita, when you were at home? English, Hindi, Hindi, Marwadi. Chalo, okay, perfect. And what about you, Karan, when you were back? Yeah, obviously. Okay, great. So now why am I asking you this question here? I think this helps you to remember it. Is that when all of us enter, like for example, our mothers told, we were told to get milk in our own regional language. So, but whenever we put it into an app, right? Let's say Instamart, right? It's an app of Swiggy or Blinkit, which is the app of Zomato. Which language do we convert that and then enter it into the app? Yes, Nandika. If in Malayalam, I would love to know what is milk called in Malayalam, Nandika? Milk? Pale, perfect. So if someone told you to order, let's say 1 liter of Pale at home, you would convert it to a certain language before putting it in Zepto. Which language would that be? English. Okay. And so would be the case here, Indrani. In your case also, क्या बोलते हैं भोजपुरी में दूध को? दूध ही बोलते हैं, ठीक है, fair. In Hindi, English, yeah. So we all say in Hindi at least. So we say दूध. So and in Kannada, I think Mamta, we say it hal. Is it? Halu, right? Perfect. So no matter whatever language we have been communicated to get 1 liter of milk, before putting it in the app, we always translate it to English and then put it into the app. Similarly, any foreign transaction, be it in pounds, dirhams, dollars, any transaction that happens from First Principles Academy to any foreign transaction that happens, we all convert it to rupees before putting it in the books of the First Principles Academy, right? So that one currency in which all foreign transactions are first converted into before being recorded in that books of accounts, that one currency, that is English, right? That one currency is English. No matter whichever language our parents have told us to buy milk in, be it Malayalam, be it Punjabi, be it Kannada, be it Hindi, be it Marwadi, in any language that they have told us to convert it into, in any language they have told us to bring milk in, order milk in, we will first convert it to English and then put it on the app. English is the functional language, i.e., English is the functional currency now. No matter whichever currency I have a foreign transaction in, I will first convert it to rupees, then record it in my books of accounts. So functional currency is that currency in which all foreign transactions are first converted to before being recorded in the books of accounts. Before being recorded in the books of accounts, all foreign transactions are first recorded to a certain currency and then they are recorded in the books of account. That certain currency is called functional currency. All foreign transactions are converted to this currency before being recorded in books of a company. Okay, so that is about this. Yeah, so this is a little hard to gather. So initially, so I just gave you this example of all foreign languages, all our personal languages that we speak at home, we convert it to English and then put it on the 10-minute delivery app, right? Same thing over here. All foreign transactions in which a company engages in. Today we have few students who join us and part of us from US. There are certain students who are part of us from UK. There are certain students who are part of us from Nairobi. Certain students who are part of us from Dubai and various other part of Middle East. Right? Some of them from Zimbabwe. So now there are lot of foreign transactions that come through. So what Sri Lanka, what we do is we first convert them to rupees and then only I can record it in the books of accounts. So rupees is my functional currency. Okay. So similarly, all foreign transactions are converted to this currency before being recorded in books of the company. That one currency is called functional currency. So this is the simple way to remember it, more logical way to keep a logical clarity about this chapter. Okay. Let's go through this one here. Indrani, how have we understood this? Very good. Okay, so that is the more practically or let's say clear way to understand it, and more theoretically, it's told as functional currency, the currency of the primary economic environment in which the entity operates. Now, what is the primary economic environment? Right, the currency in which the company mainly earns and spends its money. Right, that's a little too simplistic to justify, because then you can have so many more complications on this. That's why the functional currency, this red definition is little simpler to understand, but again, I cannot, obviously overwrite on what is already given in your textbook. So I've kept that in a simplified version, but overall, I've just written this here in the red, where you will see a little easier version to understand this. The primary in which the entity operates, this will usually take place. And how do you get the primary economic environment here? The currency which mainly influences the sales price. Mainly, the currency whose competitive forces affects the sales price the most. This is on sales price. And second, secondary factors. Okay, so they've given for deep understanding. This will be more in SBR, but I will just tell you that when you want to determine the functional currency, what you will do method to determine functional currency of a global company. Okay, how will you find it? So first you look into primary factors, right? That one currency that affects the sales price the most or the cost the most, that will be your primary factors. So first you look into primary factors. Then you look into secondary factors. Okay. Now, what about secondary factors? In secondary factors, what do you look into? In secondary factors, you look into the currency in which the company raises most of the company, raises most of its funds, and second, the currency in which it retains most of its funds. Right? There's a lot more detail in SBRs, but right now I'll just keep it to how much would you want to know. Method to determine the functional currency. Okay, just a little extra info here. Okay, method to determine the functional currency of a global company. First, you look into primary factors, and if you cannot get it here, right? Because if selling price is affected by dollars, cost is affected by, let's say, dinar, right? So you can't get a single currency which is a primary factor, which is affecting. If both of the, if selling price was also affected in rupees and cost was also affected in rupees, the one currency that affected my selling price and cost the most was a single currency, then that would be my functional currency. But sometimes I purchase from China, I sell in India. So my selling price is affected by rupees, but my cost is affected by the Chinese yuan. Okay. So that will be my selling price and cost. That will be a problem here. Cost is affected by the Chinese currency, selling price affected by Indian currencies. Now, how do I know which is my functional currency? I can't determine. Then I look into secondary factor. In which currency have I raised most of the money? Rupees. In which I save most of the money? Rupees. So my rupees is my functional currency. If you can't find a clear-cut answer from the primary factors, you can look into the secondary factors. Okay, we'll keep it at that. Again, I don't want to make it a more detailed uh, understanding right now because it's not there in that much detail here at FR level. Right, this is something we cover at SBR. But again, I'm just giving you a base understanding here. If you want to determine your functional currency and you don't know what it is because you're a global company, like Uber is everywhere now, which is its functional currency. So you look into which is that currency that affects the selling price of Uber the most and the cost of Uber the most. Sadly, if you cannot find a single currency that does both, then that you can't determine it via the primary factor. Then you look into the secondary factors in which currency when Uber was started or currently also, which currency is that in which it raises most of the money and retains currently, which currency in which it raises most of the money and retains most of the money. If it's a single currency, now that is your functional currency. But sometimes it's hard to find a single currency when you're a global company and you suppliers are somewhere else, customers are somewhere else, and it becomes a little difficult. The method to determine the functional currency of a global company, you look into primary and the secondary factors. Next, different currencies. Functional and presentation currency may be different. Presentation currency is the currency in which you prepare your financial statements. Functional currency is the currency in which you convert all the foreign transactions to before recording it in your books. Books are different from financial statements. Okay, books are something you maintain throughout the year, right? It's like your notebooks in your school. When we were young, we were kids, we had notebooks in school. That is our financial, that is our books of accounts. Then the final exam answer sheet, that is our financial statements. So the final exam answer sheet that was only done once a year at the end of the entire year. That is our final exam answer sheet. That is was done once a year at the end of the year. Once a year at the end of the year. That is financial statements. Books of accounts were like class notebooks. That was maintained throughout the year. Similarly, books of accounts are maintained throughout the year. Financial statements are prepared once a year. Okay, so the currency in which that financial statements are prepared, that is presentation currency. The currency in which we write our notebooks in, the currency in which any foreign transaction is first converted to before being written into the books of accounts, that one currency is called functional currency. Now, okay, and both can be different, need not be the same. Okay, and both the definitions are given by IS 21. All right. So let's look into these here. First, Arpita, functional currency and presentation currency. How have we understood this? Yeah, okay. Okay. The currency in which we prepare our financial statements. Perfect. Okay. Now let's look at the primary economic environment here, Karan. How have we understood what is primary economic environment? Perfect. So if we can't find it via the primary currency, we'll find it either with the secondary currency. So that is how do we determine it. And what it is, in a very simplistic sense, it's the currency. The functional currency, primary economic environment is basically the environment in which an entity operates. Right? It depends upon where the company is basically raising the money, spending the money. Currently, it's operating. Where is it exactly? That all comes under primary economic environment. Okay, and the both of them can be different as well, need not be the same. Okay, so here it's just a breakdown of that, the currency that affect the sales prices and the market forces of the country whose factors affect the sales price again. So it all comes down to sales price here. So without going into too much detail, here also the currency of the country whose demand and supply are affecting the sales price the most. Okay, affect the prices, sales price, and here also firstly sales price. So these two are sales price and operating cost. These three will be our primary factors. Now, okay, the sales price, the currency that mainly influences the sales price, the currency of the country whose market forces again affect the sales price the most. That is market forces. Based on that, second operating cost, the currency in which most of the costs are incurred. That is again coming to our help us in determining the functional currency. Next is secondary factors. Okay, so let me just put it here. These are our primary factors to determine our functional currency. These are our primary factors. Okay, so maybe I will remove it from top. Or let it be. It's okay. Primary factors here. Let's given here. Primary factors. These two are our secondary factors. Okay, these two are our secondary factors, in which the financing is obtained and in which the cash receipts are retained. Okay, secondary factors. So this is all about the functional currency. Right, the currency that mainly influences the sales price. Consider the currency whose competitive factors mainly affect the sales price. Currency mainly influence the costs, labor, material, and operating the costs. Okay, so all these come under primary factors. Currency that mainly whose the currency of the country, the currency of the country whose competitive forces, that is your demand and supply and regulation, affects the sales price the most. Here, these two are both on selling prices only. These two both are on selling prices. Okay, this is on costs. So selling price and cost come under primary factors, and under secondary factors, if primary are unconclusive, then we look into secondary. Most of its financing and operating cash retained. Okay. We got the sales prices, market forces, operating costs, financing activity. We got the primary factors, we got the secondary factor. Okay. Next is initial translation. So initially, when you make the journal entry, you record it at the historic rate. Right? Foreign transactions are initially translated at the historic rate when the transaction happens. Journal entries via the historic rate. The exchange rate when the money is paid or when the transaction is settled, that day we use the rate on the transaction date. Next, average rate, again, it's an average of the rates start of the year, end of the year. Initial recognition. Initially, they recognize in the functional currency all the assets, liabilities. Consistency. Use the correct initial rate, ensures accurate reporting. So it's important use the correct rate. Okay, so this is again a little generic here, nothing that is too technical. Firstly, when initially the journal entry is done, we use the historic rate. When the transaction is settled, we use the exchange rate on the settlement date. Then an average rate, right? If there's not much fluctuation during the year, we can use the average rate also. If we cannot determine the transaction date, if you don't recollect, if you don't know when the transaction happened, XYZ reason, if much changes have not happened in the exchange rate throughout the year, you can use the average rate. Next, initial recognition. Initially, you'll recognize everything in the functional currency. Okay, and finally, consistency. You use the correct initial rate, and if you do that, you will see that your reporting is very accurate. Okay, let's go into the three rates here. All right, let's take this one here, Indrani. When do we use the historic rate? When do we use transaction rate? Hmm. And when can you use it, Pado? Yeah. If लिखा हुआ है देखो इधर लिखा हुआ है if they do not fluctuate significantly then you can use the average rate अगर आपको historic rate नहीं मिल रहा है और any issues and if there's not much fluctuation then you can use the average rate if there's not much fluctuation ठीक है अगर बहुत ज्यादा फ्लक्चुएशन है तब शायद आप नहीं यूज कर पाओगे बट इफ देयर नॉट मच फ्लक्चुएशन इन द एक्सचेंज रेट थ्रू आउट द ईयर देन यू कैन यूज इट इफ देयर इज नॉट मच फ्लक्चुएशन क्या हो रहा है then don't you cannot use the average rate in those situations. Okay, any questions, guys, on this? Okay, just have one good look here. Okay, let's go through this one here, Nandika. How have you understood initial recognition and consistency? What is the benefit of consistency? And initially, how do you record things? Perfect. And what is the benefit of consistency? Perfect. So that is all about. Just have one good look, guys. Here, any questions here? Yeah, please. Uh, it's the historic rate. Initial rate, historic rate. Same. Date of transaction. I told you, right? Me and Mukund, I purchased from him on 1st January. So on that day when I made a journal entry, I will use which rate? The rate on Jan 1st. Yeah. So can I say foreign currency transaction, the transaction between me and Mukund was initially translated using the historic rate. On that rate, whatever rate was there, it would be recorded on that rate. Okay. So that is historic rate. All right. So that is about. Any questions, guys? Okay, so this is pretty much all the theoretical aspects of this particular transaction. Everything else is, you would see, this is all TYUs and all. It's very easy. Now that we just have the practical side of it now, okay, which we'll do it in one go. But today we've just revised this again, though we've done it. I just wanted to make sure that since it's been a gap, so we just kind of go through it once again, else you would have not understood the practicals. Okay, so again, practicals are very easy. We'll just finish the sums and directly do the exam kit sums tomorrow. Okay, so here we will do our progress tracker. Okay, so what is our progress tracker here? Our date, if we look into 23rd, 7. Okay, so what we have done, we have done chapter 9 theory. 9 till where have we done? Okay, so there are two chapter nines based on first what we had done. So we'll keep this as more specific. This is our chapter 9 final. So I'll not delete that yet because once I'll finish the entire chapter, if there's something better in that, then we'll add that also. So chapter 9 final, right? So we finished till initial translations. Initial translations. Okay, so we have done till initial translations. Okay, and our homework here is to revise entire Excel file. Okay, and okay, we'll keep it at this. Revise entire Excel file. Okay, this is one thing. Second, guys, is that on YT finished one sum of. Second thing is we will finish Dargent Co. Okay, we'll finish Dargent Co. I'll tell you where that is. Okay, so little self-study has to be started now, guys. So it's important that we do that. I'll share the link of Dargent Co as well. Sure. Single entity consolidation, Petronic, Birdco, Goldco, Trades, Panindri, Pastry, Fitco, Polestar, पार्टी को ठीक है पार्टी को कर लो ठीक है तो we'll do party को ठीक है so this is what we have to give okay so little section C sums guys we'll do it on an Excel okay and here we will update how we have gone about it okay here Indrani Arpita Nandika Mamta okay Mukund who else have I missed okay have I missed anybody guys that's it okay huh yeah great thank you so this is about this year so we will watch this one video I'll share it on the group here